Hello everyone, Clifford Bennett, Chief Economist, ACY Securities. I hope you're having a fabulous day. Markets are moving around a lot, and a lot of it is fantastic because a lot of it makes sense. US stock prices well off 2 heavy days of losses, as we're expecting exactly on the 3-day after the inflation number, give or take 24 hours, which we forecast a week in advance of the inflation number. That didn't stop me from trying to pick the top too early though a few times, but certainly enjoying the last couple of days. I hope you are as well. Markets are full of opportunity. That's why we have these sophisticated modern markets, so you can trade them in both directions, up or down. It's about getting it right, not just blindly investing and saying eventually stocks always go higher, because they don't, because I've mentioned before. 1929, bought stocks, you had to wait 25 years to get back to break even, you still hadn't even made a profit. And that's after experiencing incredible stress during those 25 years. So no, don't trade as if stocks always go up. Never heard anything so stupid in all my life. But anyway, a lot of people out there believe it, and they love peddling it to you because they're called fund managers. And what fund managers love doing is taking your money, charging you a fee, regardless of whether you make money or not. And the financial industry, the financial media, gets a lot of advertising dollars from the fund managers. So that's why you need to be on an equal footing trading platform where you can trade up or down and make the most of whatever's really going on in the world. And what it means is most of the time, if you're a bear, you get it wrong, but when you get it right, you can get it right spectacularly. Now, I'm not advocating one side or the other. I was once known as the world's most aggressive, ridiculously bullish stock market forecast. In other words, I was the world's biggest raging bull in 2009 through to 2020. In 2010, when I said the Dow Jones is going to be at 30,000 in 2020, 0 people believed me. And that's exactly what happened. You can't get it more right than that. So what I'm trying to say here is I'm not always bearish, but I am now. I think this stock market really can decline from here. I think it can decline 10% this year, maybe 15%. Be careful, because a lot of people got long at the start of the year and they're wrong. Doesn't mean I'm going to be right. I could be wrong too, but I just really want to give you the idea that stocks truly can fall for a substantial period of time. You need to manage your risk, your overall portfolio risk, and you need to use it. You need to do it using modern instruments. Now, the data, the economic data is coming out, and I'll just say again, I'm bearish stocks not because the Fed's raising interest rates. I knew that would be a catalyst. The main reason I'm bearish stocks, and have been for the last 18 months, is that the US economy, the global economy, is slowing. China is not going to return to the same levels of growth it once was at. Economic data of late is nothing but dire for the US economy. Retail sales down again, as I mentioned previously. So, in a previous episode. So, just really contemplate this idea that the industry as a whole is long, still long, and there's been a tremendous rally from the lows of last year, remember? It's a lot of big funds getting very, very long again, overly invested, thinking, oh, everything will turn out okay somehow magically, thinking the Fed is going to pivot. The Fed isn't going to pivot. The economic situation is going to get far worse. Therefore, those long positions are inappropriate. Companies are going to begin to reflect, their earnings are going to begin to reflect the fundamental reality on Main Street out there in the real world, as opposed to the Wall Street ivory tower world. And what we're going to see is those earnings disappoint. Now, to avoid disappointment, a lot of company boards are like pitching their forecasts on earnings way down, so that when their earnings actually come in down, they'll go, it's better than expected, buy. It's a positive spin all the time. Don't fall for it. Earnings are going to be falling, and falling more than people realize, on the back of a severely weakening US economy, with a very, very concerned consumer and investors too. Remember, in the US right now, manufacturing is slowing, services slowing, retail sales are negative, services overall are contracting. Parts of manufacturing across the United States are contracting. It will become a very entrenched state of affairs. The building industry is in recession already. We have property prices falling. We have stock prices falling. And I think we're going to have bonds falling as well, as a lot of global investors decide it's not such a good idea to be in the United States after all if it's going to have the worst performing economy of 2023 to 25, maybe 26. Why am I in US bonds? Why am I in US stock market? Why am I in US dollar? They're the things to watch for, all of them falling. That would mean as the US economy continues to wind down, yields will still be going up with or without Fed action. What the Fed's going to do is raise interest rates by 50 points at least 2 more times, maybe 3, and then pause. That is a real kind of nail in the coffin of the stock market outlook. It's more hawkish than most people, but I've been more hawkish since everyone was saying inflation was transitory and the Fed was going to stay at lower interest rates until now. So yes, I've been more hawkish than everyone else. That's why we've got it right more than anyone else over the last 18 months, especially the last 12 months. That doesn't mean we'll get it right all the time. And often, like a market, when someone's getting it right a lot, it's time to sell them. When someone's getting it wrong a lot, which I can do, it's time to buy them. So you should look at your fund management investments in that way too. If you're going to go that way, follow that path. If you're trading for yourself, maybe try to fade what the fund managers are always spinning in the financial media because they're all just talking their books. Clifford Bennett, Chief Economist, ACY Securities, thank you very much. Right now, I'm a bear. Thank you.